Ever pictured taking your business global? I mean, it's a tempting thought, right? New markets, incredible opportunities. But what are the first things that, really pop into your head when you think about expanding overseas? The allure is definitely there, but the journey abroad, well, it's paved with some unique challenges and some really exciting possibilities too. So today, we're going on a deep dive. We're getting into that fascinating, sometimes really complex world of international operations. We'll be exploring the multitude of factors that significantly affect how successful and sustainable a business can actually be in the global market. Our mission, really, for you, the listener, is to equip you with the essential knowledge, stuff you need to understand these crucial influences, hopefully helping you navigate those international markets, manage the risks better, and maybe seize opportunities more effectively. Okay, before we dive deeper, just a quick reminder that this deep dive is based on material from Farhat lectures. All the content, the examples, explanations we discuss here, it's all derived from the comprehensive accounting resources over at farhatlectures.com. So whether you're an accounting student, maybe a CPA candidate, or already a professional, do visit the website for additional practice questions, video lectures, and detailed support to reinforce today's topic. And a special thanks to Professor Farhat for providing this valuable material. Right. So today we'll be navigating political landscapes, legal frameworks, tricky tax structures, different economic systems, tech advancements, and maybe one of the biggest ones, the often underestimated yet incredibly powerful force of cultural differences. Okay, let's unpack this. Let's imagine our hypothetical company, maybe call them Global Ascent Corp as they plan their first international venture.
That's a great way to frame it. Because, what's really crucial here is just how interconnected all these things are. They don't exist in isolation. A shift in one area, like, say, political stability, can immediately ripple right through a country's legal and economic systems, and that directly impacts a company like Global Ascent Corp. Bottom line, their whole operational strategy. Understand this holistic environment isn't just, helpful. It's absolutely paramount for any business looking to truly thrive beyond its home borders.
Absolutely. And for Global Ascent, yeah, their first hurdle will undoubtedly be that political landscape. It can be a powerful enabler or sometimes a pretty significant obstacle. On the positive side, you've got things like free trade agreements. These are kind of like international handshakes, right? Negotiated by political leaders. They're designed to reduce or even eliminate tariffs, quotas, other trade restrictions. They really do make doing business between countries much, much easier. Think about the EU, or that agreement between the US, Mexico, and Canada, what used to be NAFTA. They genuinely smooth the path. But here's maybe the deeper insight. It's not just that they make business easier, but they can actually fundamentally reshape entire industries, opening up completely new supply chains and consumer bases almost overnight.
Exactly. And the flip side of that political coin is, well, when these agreements break down, or maybe they never even form in the first place. You mentioned trade wars, and that's a perfect example. Political disputes leading straight to tariffs and trade barriers. We saw it with the U.S.-China trade war, remember, 2018 to 2020, tariffs on hundreds of billions in goods. It just showed us how quickly political disagreements can disrupt global supply chains, increase costs for, well, pretty much everyone involved. It highlights the immense unpredictability.
Yeah, unpredictability is the word. And then there's an extreme risk, one that few companies really want to even think about: asset expropriation or nationalization. This is basically when a foreign government just seizes a company's assets, often without what you'd call adequate compensation. It's a huge risk for foreign investment. It's not like eminent domain here, where property is taken for public use but with fair payment. This is different. This is about a sovereign power taking private assets because of political reasons. Just imagine Global Ascent setting up a manufacturing plant abroad, pouring in capital, only to have the local government take it over, maybe due to a sudden shift in policy or, like you said, geopolitical tensions, like we've seen in situations involving Russia and Ukraine.
That's a critical point.
Yeah.
And it immediately makes me think about sovereign risk. It's huge. When a government engages in expropriation, it raises really serious questions about the long-term viability of any operation in that region, not just yours. It acts as a massive deterrent for protracting future foreign investment because it signals a highly unstable, unpredictable regulatory environment. Political stability and a predictable framework, they're truly foundational. You need that bedrock.
Yeah, foundational is right. Okay, so beyond politics, the legal landscape is just as critical for Global Ascent's plans. One major area: intellectual property laws, IP. These protect things like patents, copyrights, trademarks. They give companies some assurance that their innovations won't just be copied or stolen internationally without any repercussions. But I guess the real challenge isn't just having the laws on the books, is it? It's the enforcement. Will those protections actually hold up in a foreign court? That's the question.
That's exactly where the rubber meets the road. Because what's fascinating here is how consistent, or maybe inconsistent, a country's legal systems are with broader international norms. Disparities in IP protection or even in trade regulations can create significant competitive disadvantages, or even ethical dilemmas for businesses. You might find yourself operating in some kind of gray area, or worse, directly competing with local knockoffs that face absolutely no consequences.
Right. And speaking of regulations, we have trade regulations,
Okay.
things covering health and safety, environmental rules, labor standards. Now, these are generally beneficial, right, for consumers, for workers, but they can also act as non-tariff barriers. They can dramatically complicate international trade for a company like Global Ascent. You really need to know if a country's standards align with your own operational capabilities, your company's values, frankly, your budget for compliance. The administrative burden alone can be immense. And finally, within the legal sphere, there are legal remedies, the mechanisms for dispute resolution, things like the World Trade Organization or just local courts. This leads us to a pretty crucial question for Global Ascent. Is the local legal system fair? Is it impartial? Or, do local businesses maybe hold undue influence? And what about the legal costs? The sheer amount of red tape involved in just navigating the system. Sometimes, honestly, the legal process itself becomes a huge barrier.
Indeed. And the biggest disparities in legal systems, they often trip up businesses right around these points. It's not just about knowing the letter of the law, but really understanding the spirit of the law and the practicalities of litigation in that specific place. A system that's perceived as biased or maybe just overly complex and slow can be just as deterring as outright corruption. It fundamentally alters a company's risk assessment for that market.
Okay, let's pivot. Let's talk about a practical reality that hits the bottom line hard. Taxes. Different countries have vastly different approaches, and yeah, they really influence where Global Ascent might decide to operate and how profitable they can be. Take the value added tax, VAT. This is a consumption tax, really common in many European countries, applied at each stage where value is added. For importers, VAT definitely increases costs, makes products less competitive initially. But the real trick with VAT, I think, isn't just understanding it, it's potentially leveraging it. Many companies don't realize that in some systems, VAT refunds on exports can actually make their products more competitive internationally. It's kind of counterintuitive, an advantage often missed.
You hit on a key point there. It's fascinating, really. Tax policy isn't just about revenue generation for government, not at all.
Mm.
It's often a powerful, very intentional tool used to attract foreign direct investment. However, and this is crucial, companies absolutely must weigh these potential tax benefits very carefully against all the other critical factors we're talking about.
Right, like corporate taxes, for instance. Varying corporate tax rates heavily influence where companies decide to set up shop. It's a huge driver. Look at Ireland. Their 12.5% corporate tax rate, it's made it a kind of safe haven, hasn't it? For corporate giants like Google, Apple, setting up their European headquarters there, it's just a clear magnet for that kind of investment.
It is a powerful lure, absolutely. But host, I'd argue many companies get burned sometimes by just chasing the lowest rate.
Yeah.
They might not fully appreciate the administrative burden of compliance in that country, or the complexity of the local tax code, or even the long-term political stability of that so-called safe haven. A low rate isn't worth much if the regulatory environment is constantly shifting or just completely opaque.
That's a very good point. And let's not forget double taxation treaties. These are vital. They're basically agreements between countries designed specifically to prevent businesses from being taxed twice on the same profit. Often they allow for tax credits, which helps. For example, a UK-India treaty means a British company operating in India can avoid paying full taxes to both the UK and Indian governments on the same income. Without a treaty like that, Global Ascent could end up paying taxes twice. Obviously, not ideal for profitability.
That's a huge strategic implication right there. Tax structures aren't static. They are deeply, deeply intertwined with international relations. A strong network of tax treaties can dramatically de-risk global operations. It allows for much more efficient capital allocation and reinvestment back into the business.
Okay, so stepping back from the specifics of laws and taxes, the underlying economic system itself dictates how Global Ascent will fundamentally operate. We all kind of know the difference between, say, free market and command economies at the extremes. In a free market system, like the US, businesses are largely free to exchange goods, services with relatively minimal government intervention. Trade policies, currency exchanges, they're typically set by market forces, supply and demand. But then on the complete other side, you have command economies. Think North Korea. Here, the government controls pretty much all major aspects of production and distribution. This leads to heavy trade restrictions, often very limited international trade opportunities. Global ascent wouldn't have much autonomy, if any, in such a system.
And that's the real game changer for international businesses. Understanding the degree of state influence, even in markets that look mixed on the surface. A subtle shift, maybe, in government priorities in a place like China, for example, can completely redefine which sectors are suddenly open to foreign investment almost overnight. It fundamentally alters the operational challenges global ascent might face there.
Absolutely. And most countries actually do fall somewhere in the middle, right? In what we call mixed economies. China, again, is a great example. It combines elements of both. The government controls certain key sectors while allowing market forces to dictate things in others. The level of government intervention really depends on how important a particular sector is perceived to be by the state. And then you also have transition economies. Think about former Soviet Union countries. These are economies moving, sometimes slowly, sometimes quickly, from a command system towards more free market approach. And during this shift, their international trade relationships can fluctuate dramatically. It creates a lot of flux and uncertainty for businesses.
Indeed. The prevailing economic system, whatever it is, dictates the level of predictability and, importantly, autonomy a business can expect. Operating in a command economy, for instance, just means facing much higher governmental influence and, potentially, those sudden unilateral policy shifts we mentioned. That fundamentally alters your risk profile. The autonomy you might take for granted in a more free market system, it's completely different elsewhere.
Okay, let's shift gears again. In our world today, increasingly interconnected, technology is well, it's an absolutely paramount influence. Its presence, or maybe its absence, can genuinely make or break an international venture for our company, Global Ascent. And it's not just about raw internet speed, is it? It's the whole digital ecosystem. Reliable internet, solid communication infrastructure. These are pretty much non-negotiable for modern business. It's a stark reminder, though, that even basic infrastructure like reliable internet isn't a given everywhere. We've seen significant challenges in places like Lebanon, for example.
You're absolutely right. And imagine global ascent, trying to implement something sophisticated, like an AI-driven supply chain. Imagine trying that in a country where data privacy laws are maybe nascent or perhaps the cloud infrastructure is just unreliable. The absence of just one critical layer in that tech stack can render cutting-edge technology completely useless, or worse, actually a liability. It's a systemic challenge.
It's exactly a systemic challenge. Then there's e-commerce and digital payments. Crucial. You need the infrastructure for people to actually conduct online transactions, use digital payment systems. If the population can't easily engage in online purchases or payments, Global Ascent's ability to sell online is severely limited, obviously. And again, availability differs wildly. PayPal, for instance, isn't available everywhere, still isn't. And what about security and efficiency? Robust cybersecurity infrastructure, advanced data storage like cloud services, these are essential for managing large amounts of data securely and efficiently. Can't operate without them now. Finally, let's not forget manufacturing technology itself. High-tech equipment boosts efficiency, boosts quality. Less advanced tech often means higher costs, maybe lower quality output.
And what's fascinating here, I think, is that technological readiness isn't just about convenience anymore. It's really a significant determinant of competitive advantage and market access. A company's ability to leverage e-commerce effectively, or use advanced data analytics, or run efficient manufacturing. It directly depends on the host country's tech landscape. It fundamentally shapes what's truly possible for their operations and ultimately their competitive standing in that market.
Okay. Now, we've saved one of the most significant and often maybe the most subtle factors for last cultural differences. These are truly huge. They can absolutely be the make or break element for international success. Underestimate them at your peril. A brilliant framework for starting to understand these nuances is Hofstede's cultural dimensions. It's not perfect, but it's useful. Understanding these dimensions helps Global Ascent in, well, developing more effective communication, building stronger relationships, and aligning their products and services with local values and expectations. Let's start with dimension one, the Power Distance Index, or PDI. This basically measures how much the less powerful members of an organization or even a whole society accept and expect that power is distributed unequally. In high PDI cultures, places like India, China, there's generally an acceptance of a clear hierarchy. Everyone has a place, knows their place. Lower-level individuals typically don't make major decisions, or even expect to. This obviously impacts business hierarchy, how decisions flow, who you talk to. But the true insight here, perhaps, isn't just about hierarchy itself, but understanding how deeply it influences innovation. In these high PDI cultures, good ideas coming from the bottom up can face systemic resistance, regardless of their merit. It demands a very different approach to internal advocacy and idea generation.
That's a critical observation. It changes, well, everything. From how meetings are run, who speaks first, who needs to sign off on even a small new initiative. Global Ascent can't just import its flat, maybe American-style hierarchy and expect it to work seamlessly if it wants to succeed.
Okay, dimension two is individualism versus collectivism. Individualistic societies, like the US, for example, expect individuals primarily to look after themselves and their immediate family. Promotions are often based on individual performance, individual achievement. Employees are generally encouraged to voice their opinions, stand out. In contrast, you have collectivist societies, like Japan is often cited. They prioritize group harmony. Consensus decisions are really important. Loyalty to the company, to the group, is highly valued, and employees often work very closely in teams. For Global Ascent, this impacts everything from how you structure incentive programs to how you conduct team-building exercises. The whole dynamic is different.
Indeed, it forces Global Ascent, or any company, to really consider what truly motivates its workforce in that specific location. Is it individual recognition? Bonuses based on personal targets? Or is it team achievement, group success? Using the wrong approach can completely demotivate a local team, regardless of how good the compensation package looks on paper.
Dimension three, the Uncertainty Avoidance Index. This one's interesting. It measures a culture's discomfort with uncertainty and ambiguity, how much they dislike things being unclear or risky. High uncertainty avoidance cultures, Japan is often mentioned here again, tend to have a low tolerance for the unknown. They value rules, structure, risk aversion. There's even that common Japanese phrase, right? The nail that sticks out gets hammered down. Don't rock the boat. We perhaps saw this play out with Carlos Ghosn, the former CEO of Nissan, who definitely challenged established norms there. On the other hand, countries with low uncertainty avoidance, say Denmark, are generally more comfortable with ambiguity. This often leads to flatter organizational structures, more tolerance for innovation, trying new things. This is where things get really tricky, I think, because these deep-seated cultural norms shape everything from high-level strategic planning right down to daily operations.
And this directly impacts Global Ascent's appetite for risk in that market, and maybe its pace of innovation too. A high uncertainty avoidance culture might be much slower to adopt new technologies or entirely new business models. It might require more extensive research, more pilot programs, a much more cautious rollout plan. The cultural expectation for detailed plans and proven low-risk solutions needs to be deeply understood and respected.
Okay, finally, dimension four. Long-term versus short-term orientation. This is a big one too. Short-term oriented cultures, again, the US is often cited, tend to prioritize quick results, respect for traditions, fulfilling social obligations now. American businesses often seem to prioritize those quarterly earnings reports, meeting immediate market expectations, often driven by individual performance metrics tied to short timeframes. China, on the other hand, typically scores very high on long-term orientation. Chinese businesses often reflect this by planning for the very long term, valuing perseverance, thrift, saving for the future. They might be much more willing to make significant upfront investments for future long-term benefits, even if it means taking a hit in the short term. This is just a vastly different approach to project management, to investment decisions, to building strategic partnerships.
And this really raises an important question, doesn't it? How deeply is Global Ascent or any company truly prepared to adapt? To adapt its core business practices, its communication styles, maybe even its product design, to genuinely resonate with a local culture. What's fascinating here, and maybe the key takeaway, is that cultural fluency moves way beyond just language translation. It requires a genuine deep understanding of the underlying values, the unspoken expectations, in order to build trust and achieve real long-term success. It's about empathy, it's about deep learning, and that takes significant time and dedicated effort. It's not a quick fix.
Yeah, time and effort. We've covered such a vast landscape today. Wow. From political agreements and, intricate legal frameworks to those fundamental economic systems, technological readiness, and ending with those incredibly deep-seated, powerful cultural norms. It's just so clear that operating internationally isn't simply about selling a product in a new place. Not at all. It's truly about understanding and adapting to this complex, interconnected web of influences, political, legal, economic, technological, and maybe especially cultural. So what does this all mean for you, the listener, thinking about these things? Well, it means that successful international operations demand constant vigilance, constant learning, and a really nuanced understanding of the specific environment you're stepping into. Every country really is a unique puzzle. And simply trying to transplant your home country's approach, your assumptions, it rarely works effectively in the long run. So as you consider all these influences we've discussed, maybe ponder this. In our increasingly interconnected world, where does the balance really lie for global assent or for any company? Where is that sweet spot between global standardization for efficiency and deep local adaptation for truly sustainable international growth?
And what's fascinating here is that this deep dive, it's really just the beginning of your journey towards mastering these complex concepts. The principles we've discussed today, they can be explored much further. They can be solidified with practice and application. We strongly encourage you to seek out more resources like those excellent ones available at farhatlectures.com. They offer additional practice questions, more video lectures, ways to really deepen your understanding and reinforce these critical concepts. The more you engage with this material, the more these ideas will really solidify and become second nature for you.